You're listening to this podcast, so I know you've got a curious mind. Here's a helpful fact you may not know yet. Drivers who switch and save with Progressive save over $900 on average. Pop over to Progressive.com, answer some questions, and you'll get a quick quote with discounts that are easy to come by. In fact, 99% of their auto customers earn at least one discount. Visit Progressive.com and see if you can enjoy a little cash back. Progressive Casualty Insurance Company and Affiliates. National average 12-month savings of $946 by new customers surveyed who saved with Progressive between June 2024 and May 2025. Potential savings will vary.
Study
and play come together on a Windows 11 PC.
And for a limited time, college students get
the best of both worlds.
Get the Unreal College Deal. Everything you need to study and play with select Windows 11 PCs. Eligible students get a year of Microsoft 365 Premium and a year of Xbox Game Pass Ultimate with a custom color Xbox wireless controller. Learn more at windows.com/student offer. While supplies last. Ends June 30th. Terms at aka.ms/collegepc.
Welcome back to another episode of Investies. I'm your host, Linda Garcia, Texas State Representative and author of the book Wealth Warrior. Investies, I've missed you. I have missed you all so much. We have had a couple of interviews, and last week we ran a rerun. It's great to be back. Let me update you on what has taken place in the market for the last week. Last week, the Dow was up by 0.92%, the S&P 500 was up by 87%, and the NASDAQ was up by 1.01%. We did hit some fresh new all-time highs. Last week, all three indexes closed positive. The Dow increased by 0.92%, the S&P 500 closed by 0.87%, and the NASDAQ closed by 1.01%. We have been hitting new intraday all-time highs. It feels like almost every single day. At least that's what it feels like. So actually reflecting on these numbers, it doesn't feel as high as I would have anticipated the week to go, considering all of the intraday highs that we reached. It's important for us to remember that we are still moving through continuous whiplash between what the president is reporting and what Iran is reporting. There's still been contradictions between each of the country's reports. Trump keeps emphasizing on being close to a deal, and Iran continues to, discredit those statements and says that we are not close to a deal. The most recent report is from Iran this morning that they will stop negotiations with the U.S. and they vowed to completely block the Strait of Hormuz. They released a statement this morning, Monday, June 1st. As of the recording of this episode, and they stated that no dialogue will take place until Israel fully withdraws from occupied areas in Lebanon and stops all attacks with Lebanon and Gaza. In the statement released, they also said the Resistance Front and Iran have resolved to completely block the Strait of Hormuz and activate other fronts, including the Bab al-Mandeb Strait, in order to punish the Zionists and their supporters. That was reported this morning, and the market did react. We did have a negative market this morning upon the open. However, the NASDAQ has turned positive a few hours ago, which is not surprising. This seems to be the trend of the stock market. As I was mentioning earlier last week, we had several new intraday all-time highs. Now, again, given that we've had that sort of headline last week, I was a little surprised to see how much the market grew over the week. It wasn't as impressive as I thought, given that we were breaking records multiple days. But if we go back and take a look at the low that we had in March, which was around March 29th, the Dow has grown by 12.81%. The S&P's growth is 19.44%, and the NASDAQ has had a 30% growth in these last several weeks. This is something that some investors are really worried about. There's obvious euphoria in the market. I don't feel safe at these levels. For long-term investors, I don't think that we should be leaning into this. At least that's my perspective. I'm not leaning into it. I like to watch at these levels. Given everything that is taking place, I think that we should be cautious. Now, if you are a new investor, I do have a different perspective, especially if you have a smaller budget. I definitely think that you should be consistent and building out your portfolio with the understanding that there is a big probability that the market will come down and that you can work on lowering your cost basis when that happens. This is just part of the process. The most common question I get asked during these times, given macroeconomics, is, aren't you afraid to be invested in the stock market during Trump's administration? And the answer is always the same, no matter what is happening under his administration. I am never afraid to be invested during his term. I am not afraid of what will happen to my money. And the reason for that is because if we learned anything during his first administration, is that his ego is so tied to the performance of the stock market. What we are watching in this term has gotten much more grotesque than what happened in the first term. But in the first term, it was common for him to come out and be like, the Dow Jones reached a new all-time high. That was and has been always his thing. He measures his success to what is taking place in the stock market. And what's really important for us to understand, and you all have heard me say this over and over, 15% of Americans are direct shareholders in the stock market. 15%. The 15% that are invested are the top 10% most wealthiest people in this country. So it is very clear as to who he is mostly concerned about. And it's not the majority of Americans that he is governing over. It is the top 10%. Now, just to clarify, most especially for our newer investors that are listening to this podcast, just because I am not afraid of the market under Trump's administration doesn't mean that I am currently putting money into it. And just because I am not putting money into it doesn't mean that I am afraid to put money into it. If this was Biden's administration and we were reaching crazy new all-time highs, like 30% growth in the last 9 weeks, I would also not put money into the stock market. My abstinence from leaning in as a long-term investor, that caveat is really important. As a long-term investor is because I am looking for opportunities. And right now, for me, this is not an opportunity. This is just a moment where we have to sit back and relax. The market likes to fill in the gaps, meaning if there has been crazy liftoff in a short period of time, the market typically tends to come back down and fill in those gaps of where it lifted off, and it'll start to climb back up to meet those levels at a more sustainable growth pace. Now, again, to reiterate, if you are a new investor and you have taken Wealth Warrior the course and you've read my book, then you know that this process looks a little different for you right now at this point. You should be deploying and be consistent and leaning in, and you will have the opportunity to lower your cost basis with time. A quick update on inflation data won't be too long. I do want to get into the topic of this week's episode. We have received inflation data in the last 3 weeks since not giving you any updates. The most recent inflation data, basically, basically, inflation is terrible. That's not a surprise. We were expecting that. We are starting to see the impact of the war, and it's only going to get worse. That is basically my very confident prediction on inflation. The last report we got was last week. We got the PCE report, which is personal consumption expenditures. This is a report that the Federal Reserve watches the closest. Out of all of the reports that come out, it was terrible. 3.8% year over year. It was awful. And the reports that came out before then, the CPI and the PPI, were also terrible. Basically, the numbers are finally reflecting the war. And it's only going to get worse because we are still at war. And we will not see inflation start to trickle down until way after the war has even ended, okay? I wish I had better information for you, or not better, but I wish I had more positive information for you, but I don't. We're in a really messed up situation right now. So we can only expect for those numbers to get worse, which means that it's going to be very interesting to see Donald Trump's new Federal Reserve Chairman appointee, Kevin Warsh, to see what he does in order to help tackle this inflation. If he is going to do the right thing, which would be increase interest rates, or if he's going to appease Donald Trump. We will find out and see. All right, let's get started with the topic for this week's episode. On our podcast here, Investies, but mostly on Patreon, at patreon.com/investies, I have been extremely vocal about Trump's market manipulation since he came into office, and on his first term, I have also criticized it and talked about it. It is only getting worse. And so I think that it is my responsibility to disseminate information based on facts. Yes, I do have my perspective and my opinion, but I want to talk to you about what documents have been released to further implicate his market manipulation. So let's get into what needs to be disclosed from politicians, including myself. I have to disclose my investments as well. By the way, just to be very clear, I am a state representative, not a federal representative, which would be a U.S. representative or a Congress person. People on a federal level have access to information that me, as a Texas state representative, does not. So I am not privy to undisclosed information. So what is taking place when a state representative invests and a congressperson invests is completely different, most especially if they are in committees or are privy to specific information. This is where it gets extremely questionable. However, it's also important for me to say that it is absolutely legal. And we do have Congress people that are working to try and pass laws, as most of you already know, that will stop federal politicians from investing. Let's first get very clear on what market manipulation is. I am on the website investor.gov, which is the Securities and Exchange Commission, the U.S. official Securities and Exchange Commission. They are the ones that make sure that everyone is following the rules that they should be following surrounding the stock market. So their definition is market manipulation is when someone artificially affects the supply or demand for a security. For example, causing stock prices to rise or to fall dramatically. Market manipulation may involve techniques including 1. Spreading the false or misleading information about a company. 2. Engaging in a series of transactions to make a security appear more actively traded. And 3. Rigging quotes, prices, or trades to make it look like there is more or less demand for a security than is the case. So the question is, when the president of the United States buys a stock and then goes on television and tells millions of people to go buy it, is that market manipulation? Well, based on market manipulation on investor.gov, the very first sentence is, market manipulation is when someone artificially affects the supply or demand for a security. For example, causing stock prices to rise or to fall dramatically. Now let's go ahead and get into the series of events that has taken place. Let's get into what a financial disclosure is and why it exists. When someone holds significant political power, the kind of power that can move markets, change laws, or award government contracts, we, the public, have a right to know whether that person might financially benefit from their own decisions, right? Is there a conflict of interest? This is basically a transparency tool, and there is a law that requires for the president and vice president to report on their investments. It comes from the Ethics in Government Act of 1978. This was passed after Watergate, when Congress decided that public officials needed a lot more transparency. Under this law, the president must file an annual report called the OGE Form 278 with U.S. Office of Government Ethics, also known as OGE, every year by May 15th. The report covers the previous calendar year, and it has to disclose the following. 1. All income, what they earned and from where. 2. All assets, including stocks, real estate, and business interests. 3. All liabilities, debts over $10,000. 4. All transactions, anything bought or sold. 5. Gifts, travel reimbursements, and outside positions held. And number 6, information about their spouse and dependent children. These reports are made public. Anyone can look them up. They are posted online on the Office of Government Ethics website. After these reports began to come out, through the years, it was becoming clearer and clearer that there was a tie between what committees Congress members served on and the specific timing of when they purchased their stocks. And so in 2012, Congress passed the Stock Act. This is the Stop Trading on Congressional Knowledge Act. The Stock Act was originally written for Congress, and then it was later extended to include the president and the vice president. And under the Stock Act, any time that an official makes a stock trade worth more than $1,000, they must report it within 45 days of the transaction. It's called a periodic transaction report. So not only do they have to report everything, but if you trade something over $1,000, you have 45 days to report that specific transaction. Here's where the problem comes in. The fine for missing the deadline is $200. That's it, just $200 if you miss the deadline. And if you don't report at all, nothing happens. No congressperson has ever been prosecuted for not turning in the report. There's no consequence. And we do have Congress people that have never turned in the report, or they've turned in the report during their freshman and sophomore year, and then after a period of time, they get comfortable, maybe gain more power. I don't know, that's an assumption, but they stop reporting at all because there is no consequence. In fact, the Office of Government Ethics has been known to remove the $200 fine. So let's get really clear here. What is the difference between the Stock Act and the insider trading laws? Insider trading is when someone buys or sells a stock using non-public information that the public doesn't have. Doing it deliberately to profit, that is a federal crime. The Stock Act, on the other hand, this is just about disclosure. It doesn't prohibit trading. It requires you to report what you traded. So in May of 2026, the U.S. Office of Government Ethics publishes 2 new periodic transaction reports from President Trump. And honestly, now that we've learned what we've learned, I am genuinely shocked that he even bothered to report this. I mean, truly, because it seems like he has no consequences for anything he does, nor does he have any respect for the rules. So I'm actually kind of impressed that he filed, to be honest. Ew, did I just say that he impressed me? That's gross, but you know what I mean. I'm just genuinely surprised. Okay, here we go. Let's get into this report. The report shows that Trump made 3,600 individual trades. 3,600 in 90 days. This man was busy. 3,600 individual trades in 90 days between $220 million to $750 million in value. Here are some of the positions. I'm not going to go into every single one of them because it's a very long list, but I'm going to go into the ones that have large market caps that are recognizable. This includes NVIDIA, Microsoft, Broadcom, Amazon, Apple, AMD, Intel, Goldman Sachs, Alphabet, Airbnb, DoorDash, Micron. Okay? According to one analysis, Trump was up 20% or more on almost all of the positions and over 100% on AMD, Intel, Micron, Bloom Energy, Intuitive Machines, and others. This is incredible, okay? This is not standard for a trader. To be up 20% on almost every single position and over 100% on a group of positions. Trump's organization, whatever that means, did release a statement that said President Trump's holdings are independently managed by investment advisors who have sole and exclusive authority over all investment decisions. Neither President Trump, his family, nor the Trump Organization plays any role in selecting, directing, or approving specific investments. J.D. Vance felt the need to comment on his trades. He said that he's not making these stock trades himself. The president doesn't sit in the Oval Office on his computer, on his Robinhood account, buying and selling stocks. That's absurd. Honestly, the product placement of these guys is something that needs to be studied. I wonder if Robinhood increased in value that day. As soon as I said that, I remembered that in Market Movers on Patreon, I reported that Robinhood shot up in value. It has increased 30% after the publicly traded company was mentioned by J.D. Vance. This is because of some AI move that they have made, but also a lot of the reports are tying this move to Trump accounts, and Trump is being asked to comment on Robinhood. I haven't gone into the specifics. I said that the AI was the culprit, which it is, but I just think it's interesting how publicly traded companies are being mentioned and then they are increasing. If it was a one-off situation, it could be a coincidence, but it is a consistent situation that is taking place. I need to fact check myself from earlier. It looks like Trump did, in fact, file some of his trades late. So he was fined the $200. He failed to impress me. Okay. All right. Let's go ahead and get into this pattern. This pattern that we have been consistently seeing, that is a buy first, talk later pattern. So, this has been a consistent pattern that has been documented by multiple news outlets. He purchases a stock in a company, and then within days, sometimes even hours, the audacity, he publicly praises that same company. So we have case number one, Dell Technologies. February 10th, he buys $1 million to $5 million in Dell stock at $126 a share. And then February 19th, 9 days later, at a rally in Rome, Georgia, the go out and buy a Dell computer statement was made. He also praised Dell CEO Michael Dell and their family. They pledged $6.25 billion to Trump accounts. And then he continued promoting Dell February 27th, March 9th, April 16th, and May 8th. On May 8th, he made a statement that Dell was better than other computers. The stock surged 14.6% to a new all-time high. On May 27th, Dell is awarded a $9.7 billion Pentagon contract. Dell stock is now up 140% year to date and 255% since Trump's February purchase. Case number two, Micron Technology. March 2nd through the 25th, he builds a position worth up to $530,000 in Micron stocks. On March 26th, the next day, calls into Fox News and says, I just left the head of Micron. It's one of the hottest companies. May 22nd, at a rally in New York, he says, Micron is great. Stock is up 20% shortly after he says that. May 25th, Micron crosses $1 trillion market cap for the first time. An options trader placed a multi-million-dollar bet on Micron minutes before Trump's rally. So before he even said anything, millions of dollars were already getting poured into a trade. Now, for those that don't know, options traders, if they purchased an option right before, the amount of money that was made off of that trade is so much more than if they would have just purchased the stock and cashed out on the peak of that trade. When you buy options, you are buying a contract. You're not buying stock specifically. And the contract is much cheaper than the actual stock. And then you sell the contract when the stock is worth more, and selling that contract pays. It pays. I used to be an options trader for a little while. It's actually maybe a good idea to get back into that right now. Case number three, March 11th, there is a purchase of $250,000 to $500,000 in Apple stock. The reason there is a price range is because when you report, you don't report an exact number. You report what your purchase was within specific price ranges. So just to make that clear. That same afternoon, March 11th, at a rally in Kentucky, he says Apple is a great company. Apple is spending $650 billion on new plants. There was an accumulated $7.2 million in Apple throughout the month of March. Case number four, Thermo Fisher Scientific. March 11th, he buys between $15,000 to $50,000 in Thermo Fisher stock. And the same day, He tours the Thermo Fisher facility in Ohio, and he makes the statement that it is a great company and tells the crowd other companies should use Thermo Fisher for manufacturing. It's important to note that some of his trades, including the Thermo Fisher one, the Apple, and the Micron, were marked unsolicited filing, which in investing, unsolicited means that it was initiated by the client, not the broker. So there's actual documentation that he was possibly sitting in the Oval Office on Robinhood making trades himself. These are just a few cases of him purchasing a stock and then talking about it. There are so many other cases, including the one where he pushes his own ticker symbol, DJT. And the time that he created a meme coin and made millions off of the meme coin while regular people lost a ton of money. There was an actual pump and dump that took place, which is a trading mechanism almost designed to hurt people that don't really fully understand how trading works. I want to go ahead and read the definition for market manipulation again over on investor.gov at the Securities and Exchange Commission website. Market manipulation is when someone artificially affects the supply or demand for a security. For example, causing stock prices to rise or to fall dramatically. Is what Trump is doing legal? That's the question, right? So here is what we have confirmed and currently legal. Presidents are in fact permitted to own and trade stocks. There is no law that prohibits that. Disclosure is required. Trump has filed, even though he does have some late fines. He has been fined for those fees. I don't know if he's paid them yet. Currently, there is an active investigation, and here is what is being investigated. April 25th, he wrote on a Truth Social post in all caps, "Great time to buy." He also purchased Iran war oil futures. He made trades there. That is under investigation. On March 23rd, his buy pattern is under investigation, where he was buying energy defense while publicly saying the war was ending. And his Trump meme coins, specifically the structure of the meme coin, is under investigation. From my understanding, as a person that is not a lawyer, the reason why prosecution here is hard and he is not under active investigation for all of the moves that he's making is because Trump has posted publicly and announced publicly. He has shared his trades, and the isolation of praising a company on its own is not against the law. Classic insider trading requires secret information shared selectively. And market manipulation in itself is not, from my understanding, breaking the law. I have been questioning, where is the SEC? Where is the SEC? I don't understand where the SEC is, the Securities and Exchange Commission, the website we were just on. It's just so strange to me because I have seen the SEC come down hard on people that manipulate the market in this way. For example, some of you all may remember when Elon Musk tweeted a chair, and that was supposed to mean share. And then he followed up with the chairs are underappreciated, and the stock shot up. He's gotten in trouble for things like that from the SEC. Well, through the research on today's episode, I learned that the SEC enforcement chief has resigned. What has been made crystal clear for me is that corruption is legal. Okay? You're listening to Investies, a Cosmic Standard production. I'm your host, Linda Garcia. A special thank you to the team, Crystal Patino, Asia Simpson, Eliza Smith, and Jacob Winnick. Everything you hear on Investies is for informational and educational purposes only. Nothing on this show is financial advice, and nothing should be taken as a recommendation to buy or sell any investment. Always do your own research before making any investment decisions. I am not a financial advisor.
Monday AI agents took over my work. And I absolutely love it. Chasing deadlines, writing status reports, updating stakeholders. Agents handle the daily grind now. They live inside Monday.com, so they see the full picture. My work, my team, the whole company. And I don't have to worry about the data. It's safe, which means I'm free to focus on the big stuff, knowing everything runs smoothly in the background. It's completely shifted the way we work. Create your own AI agent in minutes on Monday.com.